So I said I'd take you through my revised plan in this review, and that won't be the case, mainly for two reasons. So the first is that I'm introducing some pretty major changes to the plan. One of those being the high time frame framework with incorporating PD arrays. And I gave an example of that, and it's very clear in terms of how I plan to implement that. But when I got to actually framing that in my plan, I realized it was going to change a lot more than I'd initially anticipated. And I maybe just want to give you guys a quick example of how that changes it. So this is pound CAD. This is on watch this week. Anticipate price to continue heading higher, just to these equal highs. And so I essentially look at price within, the current daily external range parameters. So that level and that level for the setup. And my whole setup selection is based on obviously identifying these 2 points and then waiting for price to correct into this EPD area. And then I'd obviously identify shorts after certain conditions have been met. Once a trend is established down into that area, then once we get into this area, there's certain confirmation I look for price then comes to the upside. And when price is coming low, as well as when price is heading higher, that those two phases almost determine, what setup I'm trading and what my rules are for those setups, or what my trade parameters are. If you watched or checked out yesterday's nugget, day 110, that's what I'm basically talking about in trade parameters. I've got my high time frame framework. I know what range I'm playing in, but then how do I filter that down to setup selection, and what conditions need to be met for me to then be confident that a particular setup is playing out. And so what this revision to my plan does when I start introducing the high time frame PD arrays is, one, doing away with this daily range, because at the end of the day, for better or worse, and I guess I'll find out over time, I'm placing a lot of emphasis on, the fib and, price getting into a certain area within the fib, as opposed to, what is price doing and where is price ultimately going. Because while the fib gives me a good range to play in, that doesn't, I become less proactive in observing whether price is gearing to take out that low and shift structure, or once price has reached this equal high and that falls now outside of my plan, and with what we've seen in recent times, I then can't leverage setups which just keep running for quite a while, and I miss out on a lot of those moves. And an argument can be made that, but if a setup falls outside your plan, then it just falls outside your plan. You focus on, what is currently meeting the setup. And I guess that could be true. However, the alternative could provide more consistent or steadier returns, and I guess more accurate opportunity flow, if that makes sense. And so when I start looking at these high time frame ranges, so for example, now with this, I focus on the monthly first before going to the daily. I see that the monthly, we're trading above equilibrium. We're obviously within this order block. And so naturally, I'm anticipating price to eventually come lower. But again, like in my video, indication that price could come lower doesn't mean that that's going to be the case right now. And so when I come to the daily, it's going to be hard for me not to see some of the things that I already see as I make this transition. But I can see again prices trading within, these daily or this daily or weekly range. And we are obviously within the high time frame order block. But given that this is the structure, I could then still anticipate, based on lower time frame structure, this high to be taken out before we then ultimately reverse. And so depending, I think, on the pair and how it's forming, I may get to that point of setup selection the same, although in this case, I won't have the fib to work on, which is kind of where I am now, and what I'm deliberating is how do I then now determine, what setups I will be trading. Will it be more dependent on, the key indicator area that we're either approaching or trading out of? Is that going to be what I look for price to gravitate to instead of the fib? Obviously, with the overarching high time frame in mind, and that we're in a monthly order block, we've created this high, we look like we want to take that out. But then, once we take this out, am I still going to be aggressive on longs, or am I then expecting a higher time frame shift for price to come lower? And so it can be simple in application in terms of, step one, do this, step two, do that, step three, do that. But then once you have it all on the chart, how do you now translate that to a decision to buy or sell? And that's kind of what I was speaking about again in day 110, where there's a lot of bottlenecks potentially in certain decision-making processes, which is ultimately your system is, how do you make that end decision? And that's kind of what I'm grappling with now, and where I feel, again, it's so different from what I've been doing, but also because of, and this is the second reason, why I haven't finished this is this was another profitable week, about 1.7% up, overall 3.4 odd percent up on the account, and we'll get to the Alpha Capital terminal in a bit. And so very close to passing phase two. It's been a couple steady, consistent weeks of, upside. Last week was a bit of a break even. The week before that, minor profit, but it's been very consistent weeks, at least over, the whole of March, and April. It was literally just the beginning of March. And that's where I was grappling with the changes in the plan. And that was the last kind of downside week I've had. And not to say that, there's this, that couldn't be luck also, because that is a factor. But I think there's a part of me that's saying, because I'm so close, I also don't want to throw a spanner in the works that could undo a lot of that progress when I'm feeling very close to, this next milestone. And so that, coupled with obviously we're getting to the end of the month. I know the first week normally of a trading month is where I don't do so well, in that NFP week where, we're crossing over into a new month. There's normally a lot of, momentum and volatility. We've seen that over March. We've seen that over April. That's also been tariff induced, but a lot of different factors that are kind of leading me to say, one more week trading this plan, and just finishing this month to take more time to continue back testing and, drafting the revisions to this plan and seeing how that could potentially impact the actual performance of the plan. It seems like the responsible thing to do. And I think as I also refine this plan, naturally there'll come a point where I want to refine less and less, because, I'm getting closer and closer to what I'll then deem as, a really solid, profitable plan or strategy that I can now extend, my data collection over 40 trades or 60 trades, where I keep that plan fixed for that period, because I'm confident that this is a really good plan. And I don't think I'm there yet, but because there's still a lot that I'm also learning, with ICT and a lot of changes that are kind of slowly being implemented, but it's also got to do with, how my performance is doing. And if I see a steady equity curve with the plan that I'm on, then that's also an indication not to change too much. And so that's the long and short of of why I'm not revising the plan this week. But getting into the performance, solid week, 3 trades taken, all 3 met the plan, all 3 were on Euro NZD. First was a loss. The next two were profitable plays. This was a scale-in of the original position. And yeah, the first position where I held that beyond the fixed 2-hour target because, that's a detail in my plan. Once I'm above 2% in profit, once I've got a little 2% buffer, then I still set a fixed 2-hour target, but I apply the price weighting method, which, if you go back to one of my trade management daily nuggets, then I explain what that is. But yeah, it's basically just an aggressive sort of trailing stop approach. And so that just allows me to squeeze a little extra out of a position. And in this case, it was about 20% more. And so yeah, that went to obviously the overall bottom line. At this point now, I'll also gear up to a full 1% risk per trade, as opposed to the half risk that I've been on. And so hence when you look at it from that lens, I'm gearing up to 1%, even on a minimum fixed 2-hour target. It's going to be 2% profit on a position, on a profitable position. Currently 3.5% up. All I need is 1.5% to pass phase two. And so it's really within a trade or two. Obviously, not knowing the sequence of results, but it's very close, which is, again, why I'm hesitant about changing too much or implementing changes at the stage which will affect performance. What did I learn this week? Lots of testing and reviewing of data this week, and learned that fixed 2-hour targets are great and have been a great source of return in this current data set. However, when comparing that to there's an alternative management strategy that I kind of still track all trades against. That approach allows me to capture far more of the upside, and the deviation in return between that alternative strategy and my fixed 2-hour approach kind of just gets wider and wider the more data I add to that sort of trade management workings sort of Excel spreadsheet. And I'll share that with you guys in a bit. I think it's a work in progress and it needs a lot more data and refinement to be accurate. And it's also why I'm not going to implement any of those changes now, because it looked like I was very close to changing the way I manage positions, but I just think that'll be too much change at once, but a change that I see coming down the line. But yeah, good. Something I was just aware of. And I think that's something that helped me just become more comfortable with holding trades beyond that fixed 2-hour target, because I see that there is upside in that, and more often than not, you can capture more of the profit than, getting stopped out just below the 2R. Second thing, obviously my kill zones have been partially incorrect for the past 7 months. I did share this in day 109 or 107, one of the two. But, when I was basically going through the changes in my plan, shared that, and that kind of just taught me that, or reminded me rather, to never adopt a fixed mindset, always remain curious and open-minded, because you may think you know something, you may think you're doing something right, but yeah, I think the difference in, the hours now that I'll be executing in may address some of the concerns or suspicions I had around sort of widening my execution timeframes. Again, which is something I shared on the Daily Nugget. If you are not following those, make sure you do, because I share a lot of these changes, how I'm doing them, and what the results of them are. I think the weekly reviews are great for, performance, but even though the daily nuggets are more bite-sized, I think because of the frequency of them, I share a lot more valuable information there. So check me out on IG, TikTok, some Vega. I'll come up on one of those. And so, yeah, incorporating previous day highs and previous day lows and determining daily bias. That was very cool. That was a webinar that I attended this week. And it's something I always marked out on the chart. So just marking the previous day high, previous day low, and I guess observing how, sweeping the previous day low or previous day high influences price. But this webinar that I attended kind of just gave me a fuller picture around how to better interpret those. And yeah, not something that I think forms a concrete step within my plan, but again, observing. And I think that's something you'll maybe pick up from, me or you've seen, is that you can have things you look at in your plan that are very concrete and fixed and lead to a particular view on the market. So if your for example, an entry needs to be in line with the 1 hour range, that is very clear. If the 1 hour range is bearish, your bias is bearish, you've got a trade. 1 hour range is, bullish, your bias is bearish, you don't have a trade. In another person's plan, they could simply observe the 1 hour range as a confluence and not particularly require that to be in line with their bias to take a trade. And so there will be some concepts where I observe them, but they don't particularly impact. They will influence my decision making because that obviously directly influences my perception of the market, but it's not a concrete factor to say if price sweeps the daily low, the previous daily low, then I look for longs, or if price sweeps the previous daily high, then I position myself for shorts. But it's more of a confluence that if all the boxes are ticked and for a long setup and price has swept the previous daily low, that just gives me that added confidence that price is going to play out in my intended direction. And if the opposite happens, I'll still take the trade, but if I get stopped out, then I'll take note of that. And over time, if I see enough that when I position myself for short and price sweeps, the previous daily low, then I end up getting stopped out. What's the correlation there? So yeah, no, that was just a side note. And then also learning that swap fees are extremely high. And so another observation that I'll be testing and looking at is, of the trades I held overnight, which of those could I have waited to enter on the day, if that makes sense. So I'm holding trades overnight and I'm paying swap for that. Do I need to be holding positions overnight? Are my entries premature in that I could wait for further confirmation before executing a position because it's resulting in paying swaps of about 17% to date over this phase 2 account, which is fucking ridiculous. Yeah, that's daylight robbery. So what's the most important thing I need to work on improving this week? Definitely the 6-figure plan. I think there's an element of maybe potentially fear at this point where I don't want to mess up something that I perceive as working. But at the same time, it's hard for me to say without further testing whether, and not even further testing, further data on this particular plan, that the results over the past 20 trades were primarily due to skill or luck. And so basically, I'm just saying I shouldn't get comfortable. I should continue to refine and optimize this plan and be active on that, regardless of what the current sequence of results are. Most important thing I should continue doing this week is remaining patient with setups and following the plan, not rushing into trades, not feeling like I need to be trigger happy. Today's Easter Monday, not in the market today, just a lot of planning and prepping for the week, but just taking my time with the setups that will ultimately unfold this week. It's, yeah, the second to last week of the month. Again, statistically, a week where I do quite well, but that doesn't mean that I need to rush into any positions. So that's the weekly review. This is my Alpha Capital count metrics. Yeah. Objectives, $1,500 remaining to achieve that target. So that is all for today. Remember that consistency is the choice you make when you start doing the things you know you should be doing day in and day out.